Hello there, traders. Hello, fellow champions. Welcome to another video of our Trading for a Living Forex Champions series. And for today's video, we're going to talk about leverage. So, I've been receiving a lot of messages from beginner traders, even intermediate traders. So, there's a lot of confusions about uh, leverage and how they can use that in their forex trading. So for today's video, I will be explaining what leverage is, how to use leverage, and how you can use that as well to your advantage. So I hope you stay tuned in this video, and without further ado, let's get straight into the presentation. All right. So we have three questions here. These are the common questions asked by beginner traders. So, what is leverage? How to use leverage in forex trading? And the other one is, what is the best leverage to be used? All right. So, starting off, so just a simple definition of what leverage means is simply the ratio of what traders' funds to the size of the broker's credit. So, in other words, leverage is a borrowed capital to increase the potential returns. So traders are able to invest a small amount of money and trade a much larger deal sizes. As you can see in this illustration, all right, uh, this simply means that even you have a small amount of capital, right, the broker through their offered options of leverages to be selected upon opening your trading account simply means that even you have a smaller capital or smaller amount of capital, they will let you have a higher position of capital amount, right? Meaning if you have $1,000, they can let you have a position amounting to what? $100,000. So it simply means that leverage allows you to what? Trade with more money. So that is one advantage in forex trading that majority of the brokers nowadays they offer uh, the individual or the traders high leverage in order for them what to trade more higher value of positions. So unlike stock trading, uh, you cannot just get a higher what leverage. All right. So that is one advantage when you do forex trading and having what being offered by the broker a higher leverage option. All right. So we can say as well that leverage is a double-edged sword. So what do we mean by double-edged sword? So leverage, however, can amplify what? Both profits as well as losses. This is if you don't know how to use leverage, definitely you will encounter huge losses as well. So the reason majority of traders use high leverage is for them uh, to have more gains even though they have a small amount of capital or small amount of money invested in their trading account, right? But that doesn't mean it only be reflected in your profits. So it also means that leverage can work against you through your losses. So even you can have a higher profit through the higher leverage usage, definitely you can also have a higher amount of losses if you don't know how to use the proper leverage. All right, so that's why I've said leverage is a double-edged sword. All right, so if we can relate that to a simple example, right? So we all know that you can work both in what in your profits as well as in losses. So remember, guys, leverage act as your buying power. All right, even you have a small amount, the broker lets you have a higher value of position. So that being said, right? So how does leverage really works? All right. So if you can see this table, for example, you have a capital of $100,000. All right. If you can see, or if you can relate to what this table really implies, so we have the several options of leverage here, normally being offered by the broker. So we have 1 is to 1, 1 is to 2, 1 is to 50, 1 is to 100, 1 is to 200, 1 is to 400, and 1 is to 500. So some brokers, they offer even to 1,000 amount of leverage. All right. So as you can see here, given 100,000 capital amount of money, you can see as well that for every leverage, what, for example, you want 100,000 value of position to be traded. All right. So transaction worth, I must say. So as you can see here, uh, as the leverage value, what, leverage option increases, right? There also a required margin to be freezed by the broker. All right. So if, for example, you want to have a position of 100,000 worth of transaction or value $100,000, and you're going to use 1 is to 1, definitely the margin required or the money to be used in your overall capital is as well $100,000. That is exactly 100% of your account. So we don't want, or normally we don't use 1 is to 1 what, leverage in forex trading. So as we moved on, all right. So for example, we go to a 1 is to 50. All right. So in order for us to have a transaction worth or a value or position of $100,000, the margin required from 100,000 capital is only $2,000, or being said, that is only 2% of your capital. So logically, as the leverage increases, the option selection you're going to use, the lower the required margin, uh, or the lower the required margin is being frozen by the broker in your account, and also the lesser percentage capital is required through having this position. All right. So if, for example, we're going to use 1 is to 500, just to have what, just to have a position of $100,000 transaction worth. So the broker will only freeze as required margin in my account a value of only $200 that I cannot use for trading. So that is only what, 0.20% of my overall capital. That is only $200 out of what, $100,000. So how do we relate this to our forex trading? So meaning, if we use the maximum advantage, or if we use the maximum leverage offered by the broker, that give us multiple what, multiple chances of opening more positions or more trades in trading. All right. So but then again, as I've said, leverage is a double-edged sword. So just a quick facts, 90% of traders lose money due to over leveraging. Again, as I've said, if you don't know how to use properly the leverage, you tend to what, over trade. So knowing every trading position requires smaller amount of capital. As I've said, the higher leverage you use, the lesser required margin is being frozen to your account by the broker, and that is only a small percentage of your overall capital. So the tendency is we become more what, confident, become more at ease that we can trade more positions, because that is only a few what, few percent of our capital, overall capital. So instead they over trade. So that's why proper risk management is definitely required. So simply means that's how leverage works. Okay, so it can work in your direction, or it can work in your way, or it can go against you. That's why it's called a double-edged sword. If you really don't know how to use it, how to apply it, and if you really don't know how leverage really works. All right, so you just have to remember this logic, right? So the higher the leverage you use, right, the more chances of you having more positions, because the required margin, or the margin required by the broker, is only a small amount of your capital. However, meaning, if you know that there are more chances of you opening trades, you tend to be more or you tend to be over trading. All right, you tend to over trade because you're having more freedom or more balance in your trading count. All right, so moving on, again, as I've said, if you don't know really how to use leverage, definitely you're going to lose more money as well. All right, so it can amplify not only your profits, but as well as your losses. Okay, so as I've said earlier, higher leverage means more chances of having more trades or more positions, because that is only small percent of capital being required, or the required margin of your broker. So which also means higher possibilities of losing, because you overtrade, right? So the more trades you open, the more chances of you losing as well. So there's a great possibility that you're going to lose more money if you overtrade. All right, so this I've said, do not overtrade. All right, guys, learn how to properly use the high leverage being offered by the broker, and know your risk. All right, so a lot of beginner traders, when they are how you call this, when being taught by other traders, or also newbie traders, or even intermediate, that do not use higher leverage offered by the broker. But the thing is, I think they really don't know how leverage really works. That's why they tend to be they tend to be afraid of leverage. Again, guys, always use proper risk management. That is the only key uh, in the forex industry. You always have to have proper usage of risk management. So don't be afraid of leverage, guys. As I've said, you can use leverage to your advantage through proper risk management. And of course, if you have smaller amount of capital, you will only probably trade using the smallest lot size offered by the broker. Do not overtrade. Do not use high lot sizes or lot positions, even though a small percentage of your capital is being frozen through the required margin of your broker. Again, be smart, guys. Be smart, and always use proper risk management. So, example, you can see here there are two traders, trader A and trader B. All right, as you can see here, they both have the same trading capital. All right. That being said, we can compare them by using two different leverage offered by the broker. So trader A, he or she uses 1 is to 50 leverage, or 50 times his or her trading capital. On the other hand, for trader B, he only uses 1 is to 5. So right now the total value of transaction is $500,000, and for trader B is only $50,000. So let's say both of the traders lose, right? So in the case of 100 pip loss, again, our profit and losses are computed based on the movement of the price through what we call as pip, or percentage in pip. All right, so if you still don't know what PIP really means, you can just go back to my previous videos, previous episodes from Learn from Scratch Forex Champion series, and you'll be able to understand some key concepts and terminologies when you're starting to do what Forex trading. So again, just going back to our example. So in the case of a 100 pip loss, right, for trader A, he or she lose what? 4,150 because he or she used 1:50 leverage, or 50 times his or her trading capital. All right. So for trader B, on the other hand, he or she only loses what? $415 as compared to trader A, which was 4,150, because he or she used only 1:5 leverage, or 5 times his or her trading capital. So when we talk about when we can relate that to a percentage value, so that is for trader A already 41.5% of his or her trading capital. But for trader B, that is only 4.15% of his or her trading capital. So that's the meaning of what double-edged sword, or simply means it can work in your way or it can work against you in terms of profits and losses. So so as you can see here, the loss is around 40% for trader A and 4% for trader B, because they both use different leverage offered by the broker, and the remaining balance, all right, is already what? 58% only for trader A, and still 95.8% for trader B. So meaning, if you use high leverage and if you don't know what you're doing, you don't have proper risk management, if you can see here, through this loss, now the trader A can only take trades what? With a margin required, or margin balance of only 58.5%, meaning only few trades he or she can do with this what? With this balance of trading capital. Unlike for trader B, he or she still has what? A high balance percentage margin remaining from his or her capital of $10,000. So that being said, he or she can still open a lot of trading positions. So because of the remaining trading capital percentage. So that's how leverage works, right? As I've said, it's a double-edged sword if you don't know what you're doing, if you don't know how to properly use it, and it can work against you definitely if you don't know how to use proper risk management. So guys, everything has risk, so you should be smart and you should be knowledgeable in applying some important uh, terminologies or concepts when it comes to forex trading. So the horizon of learning and concepts in forex trading is very wide. uh, that's why you have to know first. You have to invest in knowledge first prior to jumping into the financial market of forex trading, because if not, you'll be ending up what? Major losses, or worse, you can even blow your account frequently. All right, so that is how leverage works. Okay, so just remember this table, that the higher the leverage you select, the required margin by the broker, or the amount of value that is being frozen by the broker to your trading capital will be lesser. So it gives you more chances of opening more trades. However, it also gives you the chance or the possibility of losing. All right. So we should know that we should not be over trading, right? So that is what leverage means. And again, don't be afraid of leverage. just practice what? Always be aware of your risk, how much risk you are willing to lose in every trade, and that is how you survive in this forex trading industry. So the goal is always to protect your capital, preserve your capital, and always treat what? Trading as a business and not what? As a game, right? Even though as I've always said in my previous videos, trading is a game of probabilities and possibilities. But for us, we don't treat trading as a game. We treat it as a what? As a business. So we don't want our business to go bankrupt overnight or even a few minutes or even days. So guys, I hope you learned something on how to apply leverage, right? And what leverage really means. And actually, there's no best leverage. So this is a very controversial question, because if you really know what you're doing, and if you have the proper risk management, you can utilize the highest leverage offered by the what? By the broker. So you don't want to limit yourself. Again, it can amplify your wins, your profits, if you know how to apply it well, and if you know the reasoning behind usage of leverage. But then again, as I've said, if you don't know what you're doing, definitely it will amplify your losses as well. So guys, remember that leverage is your buying power. Even though you have a smaller amount of capital, the broker will let you have a position of a high value position. So through this table, you can see the difference on what? The different uh, normal leverage being offered by the broker. So definitely we don't want to use 1:1. So that's very simple logic. However, a lot of people still confused because what? They just jump straight into the market without the proper knowledge and understanding of how this industry works and how trading really works. Okay, so there are a lot of what? Uh, there are a lot of rooms, there are a lot of roads ahead that you're going to encounter, to experience in forex trading. And again, guys, part of the process are the losses as well. So that will serve as your learning, right? But in order to avoid or prevent losses, you have to know these things, all right? Not just the strategy or not just the system, but important concepts that might help you understand forex trading even more. Again, guys, go deeper, go in depth when it comes to analysis, and appreciate this simple concepts. Again, guys, once you have know this, definitely it will improve your trading because you're aware of what will happen, of what will reflect, depending on the what? Your actions. Okay, so part of it is the use of leverage. So remember, leverage is a double-edged sword. All right. So that ends our what? That ends our video for today. I hope you have learned a lot. All right. So again, I would just like to thank my supporters, my VIP students, fellow champions, even those non-VIP students, those members in the private group. Again, I really appreciate you guys. Uh, and for those who are just new to this channel, who just recently subscribed, again, thank you. And I hope you find value in every content that I make. So again, see you at the next episode or next video, and I will be having more videos to come to share more trading ideas, concepts that will help you as well in your trading journey. So again, this is Anthony again of Trading Frontier Philippines, TFP Champion Forex. So bye bye.